What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 25. These are the trades for July 14th. We made some trades today, so let's get into it. So first thing first, let's talk about all of the levels and zones that we have on the chart today. So let's start off with the zones that we have towards the left side of the screen. We have a blue zone towards the top of our range that we had established today. Now this blue zone was established in the pre-market, and then I just extended it across throughout the rest of the session. Same scenario with this green zone down below. We established that in the pre-market and then just extended it across. So those are the two major zones that we had before the market opened. And then this zone down here for trades 13 and 14, we drew that a little bit later, but we'll get into that. So let's start our analysis today at the open at 9:30. So we see prices initially sell off as prices open at 9:30, and then we pretty much just played within the zone, within the zone, within the zone. And this is what led me to trade number one and trade number two. So when I saw this zone get respected and then I saw this higher low get made, that triggered one of my favorite setups. I like to go long when I see a higher low, and I want to go long as close as I can to the lowest levels of that higher low and pretty much use that price level as a support level that I'm looking to go long from. So at trade one, I went long at the bottom of the zone, but I was a little bit too early. So let's zoom in a little bit. It's hard to see. All right, so this is trade one right here. I went long at the blue triangle and got stopped out pretty much right at the lows of the move. And one thing about it is that when you're trading a lower high, sometimes prices do have a tendency to come back and test a wick that might just be sitting down there. So even though the overall support level might have a whole lot of touches up here, it might just be one little flash back down to test that wick and then come back up. So always keep that in mind. But a lot of times in the market, what I've learned is that if you have a trade that's in line with the trend from good prices and it doesn't work, but then prices immediately spike back through that price again, you take that same trade in that same direction. And that's pretty much the same thing I did at trade number two. So I got stopped out right here, but as soon as prices spiked back into the zone, I went long right here at the blue triangle and then just simply took it back up to the top of the zone. It was more room to take it back up to the top of the blue zone, but for me, I just like to play it conservative. I know well, not for a fact, but I'm pretty certain that if it broke back into the zone, it's definitely coming back up to the top at least. What it does after that is up for debate, but I always want to make sure that I lock in those gains. So that's something that's always important. Make sure whatever your strategy is, you stick to it. You don't want to get too greedy or you don't want to get too conservative. You want to find that good balance in the middle and follow your strategy perfectly the same way that you plan it out. So that's one of the biggest takeaways I learned from one and two. Just whenever prices spike back for your entry, go ahead and take that same trade. Now on trade three, I went long here expecting for support to hold up, but I should have bought lower. So if you think about it, buying lower makes more sense because buying lower will give you a better chance of being able to maybe cut your trade short before it starts to go against you. Because look at where I went long at on trade three. Now compare that entry to the entries that I made on trades number one and trades number two. Look at how trades number one and two, they came more so towards the bottom of the zone. And that's really the ideal place for me when I try and trade within the zone if I'm looking to go long. I want to go long as close as I can to the bottom level of support for that zone, because what I've learned in the market is that the closer you enter the zone into the middle, the more chances you have of that trade not working, because from the middle of the zone, prices could really go either way. They could come back down to the bottom. They could go all the way back up to the top. It's really a lot harder to determine which way prices are going to move when you're trying to determine that from the middle of the zone. So for me, I always like to put my entries, if I'm going long, either all the way at the bottom or all the way at the top of the zone if I'm going short. And I think on trade three, if I were to go long at the bottom of the zone right here, it would have pretty much put me in at the bottom of this wick for this candle. And then as prices opened up here on the next candle. So I would have been in profit by maybe 6 or 7 points. Now that's not enough to trigger my break even, but it's enough for me to think about whether or not I want to hold the trade if it starts to go negative against me. Because I'm like, okay, I bought it at the bottom of the zone. I did buy against a little bit of momentum, but prices went 6-7 points in my favor. Then you have an opportunity to say, if they come back, do I still want it? Do I want to add more or do I want to cut the trade? But the thing is, when I go long at higher prices within the middle of the zone, I take away that opportunity and I'm pretty much just giving myself a one-way ticket to a losing trade where I have no control over it. So that's why taking the best entries is so important, because not only does it benefit you on this trade, but it benefits you in the future for decisions that you got to make down the line, probably like immediately down the line. So that's one of the biggest takeaways I got from trade 3. Don't trade from the middle of the zone and trade from the best prices, because you can give yourself an opportunity to maybe cut that trade if it's not going to work for you. So then after trade 3 got stopped out, we see prices come back up, retest the top of the zone once again, and then pull back. Now, once prices pull back into the zone, I was just expecting for prices to come all the way back down and retest the bottom of the zone once more. The reason I thought that was because we have double top that formed up here, and then we had what I consider a lower high that got formed at this junction. So I'm like, okay, double top plus a lower high already coming from what was a pretty, not a super strong downtrend, but strong enough where we can identify it and say that the move was down at that time. So I'm like, okay, double top, lower high coming out of a downtrend, coming back into the zone. That's my entry. So it's cool for me to take that trade on trade number 4. Went short right here, short at the top of the zone, but I ignored the higher low that just formed. So that's the thing. Even though I shorted right here on the first attempt at trade 4, I would say trade 4 was a decent trade because everything lined up until that point. Now, when trade 4 got stopped out, well, that wasn't a full stop loss. I actually closed that out manually. Now, trade 5 was a full stop loss because I took that same trade from trade 4, even though nothing had really changed. And that's the thing. If your trade originally doesn't work and you felt like everything that you did followed your trading plan, you got to take a step back and try and figure out what exactly is going on, because something isn't right. Either you're reading the market wrong, or you might be a little bit too early, or it could be both. So on trade 4, I'm like, okay, that's a good loss, but you don't want to take that same trade back to back. You want to think about your decisions and at least give it maybe like a 2-minute period before you want to go back and think about your next move. Because after trade 4 got stopped out, the higher low got formed. So once I see that higher low, even though the zone is the zone, you got to remember that eventually a zone will get broken. And when the zone does get broken, it has a tendency, if it's going to break to the upside, it's going to create a higher low inside of the zone. Or if it's going to break to the downside, it's going to create a lower high inside of the zone. So let's actually go back to a chart from a couple of days ago. So this is a chart from the day before yesterday on July 12th. So let's take a look. Let's focus on trade number 5 and let's focus on this zone. So remember, a couple days ago, I was telling you guys how to trade a consolidation, a consolidation that follows a spike. So we had our consolidation zone. We were trading within it. But then eventually we started moving towards the bottom of the zone where we eventually broke out of it from. Now look at how we came back to test the top of the zone this one last time, and then we came back to the bottom. Now this trade right here, I went long because I'm expecting for the consolidation zone to hold up. But look at how we had a lower high before that got established. So even though I believe that a zone is going to stay within the zone for as long as prices want to, it's not always guaranteed, and usually it's going to break out of it if it gives you that lower high in a downtrend or a higher low in an uptrend. So that's the same scenario that I dealt with today, just on the opposite end. 2 days ago it was to the downside, but today it's to the upside. So always remember that, trade the zone for what it is, but don't ignore the potential breakout signs when you start to see them. So after trades 4 and 5, we see the uptrend continue after that higher low got formed. We break out of the zone, push back up into the blue upper zone, create another higher low, and then once we create that higher low, I'm already looking to establish a level of support, and I just used the level of support from the zone. It's pretty convenient how those two things lined up. And when prices came back into that level, I went long on trade number 6. This trade was okay. It worked for me for a little bit, but it never reached my profit target, and it came back just to stop me out at break even. So that's pretty decent. Then this whole little spike right here on this candle is because we had news that came out at 10 o'clock this morning. Not quite sure what it was. I think it was like I don't know, some type of survey or sentiment thing, but not too impactful enough to have a little small move. But things got right back to what they were doing before. So once we come back up to the top of the zone, we retested the bottom once again, and then once we broke out of the zone and bounced back up to trade number 7, that's where I went short, because right here I was expecting a breakout retest after the breakout had already occurred, because I'm looking at it like this. I say, okay, we broke out once right here, we didn't do it. Broke out another time right here, we failed to see any follow through. A third time we failed to see any follow through. Fourth time and a fifth time. So I'm like, eventually this breakout is going to be successful. So I was kind of trying to anticipate that on trade 7, but that's a problem I've been having for these past couple of days, really. And I think I talked about this on the video from before, where I was like, even though you might have an idea about a trade, no matter how excited you might be and think that that trade is going to work, you always want to see prices come into that level first. Then you want to observe the reaction that they have. And then based on that reaction, if it goes along with what you were planning and what you expected, then yes, you can get into that trade. But you don't just want to put your order there before prices even reach that level, because then you're really just taking a educated guess. But you want to more so you don't want to anticipate. You want to be reactionary. You want to see what happens and then react. And then also, I think trade 7 is a good example of me having a better idea of what the whole picture represents. I think on this specific day, I was too focused on the small details and I ignored the bigger picture, because if you look at it, really the entire range goes from the bottom of this support level down here all the way back up to this swing high that we have right above our blue uppermost zone. That's the range for this entire period once the market opened at 9:30. That right there is the range, the entire range. Now, the way I draw my zones based on consolidation periods that happen based on price action. And then I just extend those zones throughout the market. But I never change the price levels for the zones. And that's cool, because a lot of times it'll give me structure where I'm just trading in and out of the zone or above and below the zone, and I'm using the zone as an anchor point. But the thing about having that zone remain the same and never changing it is that sometimes prices will move in and out of that zone to the point where they start establishing major levels, or sometimes another zone either above the zone or below the zone, and you got to compensate for that. So because I don't change the prices on my zones, I got to figure out a way to deal with prices when they either go below the zone or above the zone. So what I figured out, or I guess the way I like to classify it as either prices are moving below the zone a lot or above the zone. So I call it support below the zone or resistance above the zone. So let's actually dive into that real quick. Support below. So I actually wanted to go over a really good example from a day from before. So this is from Tuesday, May 9th this year. So look at how we had our spike to the upside, followed by our consolidation period. Then we made our zone around that consolidation and extended it across throughout the market and used that as an anchor point to make our trades from throughout the rest of the session. But notice how, yeah, prices trade within the zone. There are definitely some reactions, but it only trades within the zone maybe 80% of the time. But there will be occasions like on trades 1 through 3 where we have a spike lower that creates a level of support, and then we come back and test that level multiple times throughout the session. So that's what I call support below the zone. So whenever I see a concept like this in the market, I gotta always remember that, yeah, the zone is important, but you always want to remember that you're trading a smaller zone within a bigger range. So you don't want to just get caught up in the one zone that you're trading. You want to keep the overall picture in mind too, and combine the two strategies and the two things that you're seeing with the bigger trading range and the smaller trading range, so you can make a good decision on whether you want to get into the market or get out of it. So when we bring it back to today's chart, we pretty much have a very similar setup, except the only thing was I didn't really recognize that we had support below the zone until after the session was over and I'm doing my trade review. So right here, for me to go short expecting the breakout, in any other scenario, maybe if we didn't have these touches down below already, that would have been a potentially good idea at trade 7. But because we already had support below the zone established, you got to think, if we came back to test support and that was the bottom of the range, more than likely it's a good chance we come back up to the top of the trading range. So you don't really want to hop in front of that momentum to the upside and try and anticipate that momentum dying out prematurely. So that's the biggest lesson I learned from trade 7. Remember to recognize the overall market structure that you're trading in and don't anticipate the trade. Be reactionary. So that brings us along to, hold on. Okay. That brings us along to trades 8 through 10. Now on trades 8 through 10, let's go ahead and read the notes. So I shorted the top of the zone based on the same idea from trades 4 and trades 5. Now, if a trade doesn't work, don't keep pushing the issue. And that's exactly what I was talking about on trades 4 and 5 too. If it doesn't work, reevaluate. Don't keep trying to force it to work, because the market is telling you that whatever you're doing, it's not right now. So reevaluate. That's it. Don't take it personally. This is just part of the business when it comes to trading. Sometimes you'll be right, but sometimes you won't be. And it's nothing wrong with being wrong, but it is something wrong with being wrong and then continuing to force that trade. Now let's actually break it down. So on trade 8, we see prices come back into the top of the zone. So when they did that, I automatically was like, look, the zone is the zone. If we're back at the top, I have to short it. Now that was a good entry. We came all the way back down for a little bit, we came all the way back down to the middle of the zone, and that was actually enough to trigger my break even stop. So when prices came back, I got stopped out for break even, and that's okay. But one of my biggest rules that I have in my trading strategy is to respect my break even trades, meaning that if prices come back to hit your break even stop, that means that something changed between the time that you entered that trade with the idea that you had and the time that you got stopped out. So you need to figure out what that change is and why it occurred, and based on what that reasoning is, decide whether or not you should still get into that trade or maybe just wait a little bit and wait for more confirmation in the market. So I think that's the biggest mistake I made on this next trade right here at trade 9, was just taking that same trade once again. Because if we look at this overall scenario, yeah, the short trade eventually did work, but the first thing you have to do was give the market time to show you that it was ready to roll over. You don't necessarily want to short the market when you have the first sign of prices rolling over. You want to wait for that confirmation where you're like, oh, okay, we have a double top followed by a lower high. That came a little bit later. So this was trade 9 right here. Bad mistake right there. But then I come back on trade 10 and look at this. This is really interesting to me because on trade 10, I did short at the top of the zone after we saw a long tail candle wick. So I'm looking at that as a lower high. So if you compare where we started from, the overall downtrend, right? This started from right here. So this would be lower high number 1. And then to me, this would be lower high number 2. So going short off of that, that's a good decision at that time. But even though I did have a good entry with a good trade idea, my management of this trade was very subpar. And I say that because if you look at it, I shorted here and I had multiple opportunities to get out either with a small profit or to even get out at break even, because I shorted on this candle. The candle next to it, opportunity for small profit or break even. On this candle, the one after, opportunity for a break even stop if you wanted it. On this candle next to it, it went against me by a little bit more, but it still eventually came back and gave me an opportunity to get out at a small profit or potentially at break even. But I just let the trade rock out, and eventually it came back to hit my full stop loss. So I think that right there is just a very direct example that shows you why it's so important to manage your trade actively and the correct way when your trade is open, because you need 3 things to have a good trade. You need a good entry, good trade management while that trade is open, and then a good exit when it's time for you to get out of that position. And if you want your trades to really be successful and have a high probability of working out for you, you got to make sure you have all 3 of those things. 2 out of 3 is not going to cut it. 1 out of 3 is not going to cut it. You need all of them. And that's one of the biggest takeaways I learned from this whole entire junction between trades 8, 9, and 10. It's like, okay, you might be right, but you got to wait for that confirmation. And when you do have a trade that's right, don't blow it. You know, maybe market is not giving you the profit you want, but it's giving you profit nonetheless. So just go ahead, lock that in, and then wait for the next best opportunity. So on trade 11, I pretty much went short at the top of the zone after seeing that lower high get created, but my break even stop got hit. Now this was also the same area that I went short from trade 10. Same thing happened, but this time I had a chance to actually take profit at the bottom of the zone, like right here. But I said, you know what? If it's one tick away from the bottom of the zone, why don't I just hold on and just get that last point? But sometimes in the market, it'll just reverse on you and you're trying to hold out for that one tick and you end up giving back 20 points. So needless to say, I was very frustrated after trade 11 because after going through trades 8, 9, and 10, I was like, okay, I'm struggling, but I'm starting to get it right. Then I got it right on trade 11 and it still came back to break even though I had a chance to get my profits. So I was super frustrated and I ended up taking a revenge trade at trade 12 because I'm assuming that, okay, if we finally had that breakout to the downside, we're finally going to continue and just keep moving back down to retest the support level below the zone. But that was not the case. And trade 12 is a great example of why you really don't want to short towards the lows of a downtrend or the lows of a swing low. The same way that when you're in an uptrend, you don't want to go long towards the highest prices of a swing high. You're just decreasing the probability of that trade working because the move has already happened. It's time now to sit back, reevaluate, and then figure out what's going to happen next. And then also trade 12, even though it was a small loss, it didn't actually hit my full stop loss. But still, I view this one as, yeah, it's one loss on paper, but to me, I look at it as 2 losses because I took the original loss that you can actually see, but I also took a loss because I didn't take that same trade when it came back to test my price that I got in from at trade number 11. Because if anything, this makes perfect sense in terms of market structure. You had your original move and prices came back to retest the price level that original move started from. That's exactly how the market should usually go. Now, when I'm trading it the wrong way and I'm trying to be emotional and I'm trying to catch it from the lows instead of waiting for it to come back so I can short from higher prices, me being in my feelings and in my emotions really just led to me not taking the trade at 11 because I saw prices come right back up here and I was like, man, I'm so done with this market, bro. I'm not getting in right now. Like I'm tired of taking losing trades from my best interest. And sometimes when you have that mindset, you avoid trades that would work for you. So not only did I take the loss on trade 12, but I also took a loss because I didn't get back in to the move that would have eventually given me that big move to the downside that I was expecting from the time that I started trading from trade number 4. So throughout all of this process, I ended up not catching the move that I wanted because I took trades that didn't necessarily make sense. So that's just another example of why every decision that you make in the market, especially those small decisions, are really the ones that are the most important because you might think, oh, this is only going to affect me now, but the decisions that you make in the market will have some type of effect on you, good or bad, down the line. So if you have a choice, you want to set yourself up for success and make good decisions now. So then down the line, you won't have any fears of taking the trade that you know is right for you. And that's the biggest thing I learned right there from trades 11 and trades 12. So then let's move on to these last 2 trades of the day and really discuss the ideas that I had behind these too. So on trade 13, I went short too close to the swing low during the downtrend. Now, this was a good idea, but next time I just need to short from higher prices because the idea was right. We see that the overall trend is down. We pretty much know where prices are going. But that's another one of my problems too. When I feel like I know where prices are going, I just have a tendency to just get in because I think that, oh, well, if I know it's going down, then I can just short from anywhere. And if I had a wider stop loss, that could be a good strategy for me to employ. But because my stop loss is so tight, I have to get into the market at the best prices. And most of the time, if I don't do it that way, I'm going to get stopped out. And I'm usually going to get stopped out at the exact, if I'm shorting, I'm going to get stopped out at the exact swing high, which is exactly what we saw right here at trade 13. I went short, yes, but I got stopped out right at the swing high, which is where I should have went short at. Which is why I always say, if you're in a downtrend, be patient, let prices come back to higher prices, key level of resistance, and then short from there once you see prices start to move away back down to the downside. So right there on trade 13, that's frustrating, but yet is motivating in the same way, because yeah, I did take a bad trade, but I know exactly what went wrong with it. So I wouldn't say I was too emotionally charged after this trade. I was just like, yeah, okay, I understand. And also, another concept I want to talk about is the spike that leads to a consolidation where you don't really play in the zone too much. Because if we look at other scenarios where we have a spike into a consolidation, we see a lot of times where prices will play within that zone and then eventually break out and move on. Now, in this scenario, the zone was created, but we didn't play around in this zone for too long. We established it right here at this swing low and this swing high. And then we played within the zone for these 1, 2, 3, 4 candles. And then we immediately moved below the zone and we kept moving lower. Now, in scenarios like this, where prices don't really stick in the zone too long, you can have an opportunity to short that level as prices come back into it and retest that upper level of resistance for that zone. And basically it's like that because most people were expecting it to stay within the zone. So when it didn't, everybody is pretty much still going to have all of their orders resting up here, waiting for prices to come back so they can short against it. So that's pretty much the concept that I had on trade 14. So let's go back and read those notes. So I went short as prices came back to retest the top of the zone, and I held my trade to my target, my profit target, about 20 points below. So that's just another another strategy that you can employ when it comes to trading the zone. You don't always have to expect prices to stay in it. Sometimes they won't, but you can still use that level as a level of resistance to short from potentially if prices ever come back into it. So that was my last trade for the day. I just wanted to end the note on a positive note. I know that trade 14 is pretty much representative of the things that I want to do. So that gave me a little bit of confidence going forward so I could, ride that momentum throughout the weekend. But overall, when we look at today's day, even though I did take losses, I'm not too disappointed. Well, I'm disappointed about it, but not too disappointed because I understand exactly where I went wrong, and I understand the exact small details that caused me to go down the wrong path today. So those are some of the major things I want to focus on in my back testing session this weekend. Just focusing on taking the right trades. I think the biggest thing for me is to be more patient. You don't have to jump at every scenario that you see. Even if you see a trade forming, sometimes it's better to just let it go, see that trade work for you, and let your confidence build, because then you can say, oh, I was in line with the market even though I didn't take that trade. So what else? There was one more thing I wanted to say. Oh yeah, in terms of the overall week, even though today was a losing day, traded 4 days this week, made profit on 3, lost money on 1, but the profit that I made on the 3 was enough to outweigh the losses that I took today. So even though I'm disappointed with today's results, overall through and through, it was a decent week. So I want to feel good about this week, but I just can't, because I don't like taking losses on a Friday, because then you got to carry that throughout the entire weekend and you don't get a chance to redeem yourself until Monday. It'll be different if you take a loss like this on a Wednesday, because then you can come back on Thursday, redeem yourself, and do what you know you're supposed to, come back on Friday and keep that momentum rolling. So it's just tough taking losses on Friday, but one thing it does is that it lights a fire under you, and it makes you extremely motivated to get your back testing done, get your studying done, and chart up through the weekend and rip through these charts until you get a better sense of understanding for you as a trader and how your strategy works in the market. So those are the main things I'm going to be focusing on this weekend. It's been a good week overall, even though we ended it on a sour note. I appreciate you guys for rocking with me all week. I hope you guys learned a lot this week because I definitely did. But I'll see you guys back again on Monday. That should be July 17th at 9:30 a.m. But until then, you guys, take it easy.